How's it? Hang loose. MongoozeMax Hawaii here with another edition of Crypto Corner. Okay, where we're going to be looking a little bit at what I kind of was figuring out so I could pass along what I figured out and hopefully be helpful. See, I'm a little bit new at cryptocurrency. I am no expert. I am no financial advisor. And I'm going to tell you what I'm doing, and you can take it or leave it in that direction. So I'm no financial advisor, so what you do with your money, remember, that's all your decisions, not my responsibility. That's a small disclaimer. And also a little bit of a watch out and learn as much as you can, because cryptocurrency is a very good arena to earn some money via trading and, I would say, speculation, because I'm going to make a point that it's a lot like the stock market in a lot of ways in its behavior. However, there's a lot of scams out there, especially during the COVID lockdown stuff. There's a lot of scammers, more than usual, that are hanging around, so be extra careful, because cryptocurrency has that. Those types are running around in the regular, honest crypto world. Anyways, that being said, okay, here I'm going to say, at the moment, I've been looking at, and I'm going to post a little insert of what I've been seeing on Blockfolio, which is an app, and I'm using it as a market indicator. I'm looking at the price fluctuation or the valuation of the cryptocurrency by buyers and sellers on the open trading market. Now over here, there's hold on for dear life, because cryptocurrency is known to be volatile. It goes up and down quite a lot, but if you hold on for dear life, which you'll see it go up and go down and go up and go down, don't panic. One of the main points of this essay, and I guess I'll try to be brief, but I want to cover these points. I think they're important. So just hold on. And it's probably one of the better strategies, although it's not as maybe adventurous as buying and selling. Maybe you can hodl a lot of your stuff and, be adventurous with the buy sell with part of it. That was my initial plan, and that's what I advise myself, but I'm just telling you what I have plans, my little schema. So the next thing I want to point out is market fluctuation. There's more than just crypto. Cryptocurrency has its up and down and up and down and up and down. It's called volatile. Just like gasoline is a volatile liquid. It will go up in flames fast, whereas others aren't. Now, other markets fluctuate, and another market is basically what you have on Wall Street and other international financial markets of stocks and commodities and bonds and futures and this and that and all that. I'm not an expert, definitely. But I keep an eye on it, and I try to keep a feel of what's going on. What is that all about? But it goes up and down via market, via the buyers and sellers, what they feel like buying, what they think, they speculate they can make money on. Now, the market fluctuation of the cryptocurrency is supposed to be different because it's on a blockchain. But I'm saying there's a lot of similarities. So as buyers and sellers are the common denominator, and this is my way off some financial people might agree with me, and there might be tons that disagree with me, but I tend to look at, and you see all those analytical graphs, and people get very analytical with the specifics of the graphing, because we're so good at graphs and computers and analysis of these things. But I'm saying the common denominator is people. And whether they want to buy or not want to sell or whatever their thing is, behind all that buying and selling are people making decisions. So that's what I'm calling organic. That's more the organic thing rather than the analytical. And there's a phenomenon, let's say. It's you can bet on it, take it to the bank, I'll say. And it basically comes down to a kind of a reflex reaction, you know? Something happens and boom, it's like a reflex. A lot of it's based on the security of the buyer or seller, whether they don't want to lose money, they want to gain money, profit. So when current events or things happen in the news, it usually produces a reaction as a reflex to the event. So this is a little principle that just seems to always be there. And this is something that always keep in the back of your mind, I would say. Now, I just wanted to say something about this kind of thing because I noticed ODUWA was losing its 90-cent plateau kind of deal. And I was curious to see if this was really connected to a more stock market-y thing. So here is the Dow Jones Industrial Average, the DJIA, and I don't usually look at these things, but I just had to give a peek and grab a graph, and I just popped one. This one's called MarketWatch.com. You just pull these things up, just type in anything about Wall Street graph, and you'll get something. And if you look at this, here's an overall graph. It's just a generalized, simple moving average. It's an average graph. It's a bunch of averages going up, and it takes a big, very big dip. And it continues on its trajectory upward. Notice it's kind of a similar trajectory, but it's shifted downward with this downward thing. Now, what would make the stock market dip so heavily? Right at this point, and if you look at this point, at its lowest, quote, basically low point, it gives you a little indicator. Look what date that is. January, February, March. March 24th. It'd be that little dip, or the big dip, I would imagine. And this would get people very much concerned. But what I'm telling you is that that phenomenon of it's organic, people buy and sell because how they feel, and it's connected to news events. This bad feel making people sell, making this dip as a result, comes much more in an earlier, let's forget that, an earlier time. When did it start to dip? The end of February. And remember, this last February was a leap year February, so it only had 29 days. So this is the day before the end of February, right here. And what happened there? If I, just out of my memory, that's when the U.S. started to deal with the coronavirus coming to the USA, the States. And once the coronavirus was coming to the States, look what happened after. It was a panic and a sell. Now, I'm looking at another graph, and this one I got from Bloomberg.com, which warns me that my little free trial run's about to end. They're good with selling, because this is Wall Street stuff, and people who analyze Wall Street stocks and all that stuff. This is the S&P 500 index. Don't ask me why. I guess there's 500 they're indexing. Something important. I don't know. Okay, but the general idea is here, closer to correction. Just generally trying to get over what the idea of what's being portrayed here in the graph. The U.S. stocks fall for a fourth straight session. Okay, so they're falling. This is that right after the virus, and it starts going up, but then it dips down here again. Here's a broad, longer picture. And they're calling it overbought, oversold, because this is supposed to be the best price, I suppose. And they're thinking, oh, I guess maybe some people overbought, and that's maybe what, they'll analyze. But if you look at the date, I'm going by timeline. Boom, boom. That's February, end of February, March. Now over here, it doesn't show, but this little bit here, it's basically right here is September. So right about at the beginning of that dip is September, and it went down. And that's all I'm going to show right about that. Oh, wrong way. Okay, here's a little closer of that. See this little graph, this little teeny line right here is September. It goes up a bit for a few days, a day or two, and then it goes down, and it jumped down. And what we have here is, remember, hold on. Don't get panicky, buy, sell, because it's a better strategy, and I'll point out why. And I mentioned this market fluctuation, just reminders right here. And it's people are the common denominator. It's an organic thing, and they react to news events. Now we go off here, and we're looking at Bloomberg again. This is the article. Notice the date. This is today is September 23rd, so this is a 3-day-old article. Actually, 2 days old because they updated it 2 days ago. The stocks pair losses, so they're going down, but they sort of curbed their little going down, so that's why they're calling it pair losses. As tech rally tempers, the big techs like Amazon, things like that, Apple, tech, big tech they call them. The tech rally tempers, so tech's going up. Obviously, everyone's using tech now more and more. Zoom prices must be going up. Stock holding on Zoom. They've been lucky. Tempers bank rout. So banks, I guess, went down. Tech rally went up. So that's what paired the losses. And here's a market wrap. So it took me a while just to figure out that headline because I'm obviously not Mr. Wall Street. But I'm taking a look at the article just a little bit, and I don't often do this, but once in a while I shall, because information is a good thing to acquire at times. So the eruption of the bipartisan battle, so that's the stuff in Congress with replacing Justice Ginsburg, who recently passed last Friday, so like 3-4 days ago, damaged and already some prospects for another round of fiscal stimulus. So that stimulus package that they were going to sell has been kind of kicked down the road. And Federal Reserve Chairman, blah, 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 economy is improving. So someone's saying the Federal Reserve Chairman, Jerome Powell, is saying the economy is improving, but has a long way to go before we'll recover the pandemic. So it's improving, but it's still bleak. FDA commissioner warned that U.S. may experience one more cycle of the virus in fall. So here's the, oh no, here comes the virus, because fall and winter, they're going to have another wave of the virus. And the stimulus packet, money in the pocket, is not really happening. So what would that make the average human buying and selling stocks for their own profit do? What's the reaction? So, there's just logic there. So commodities. I'm not good at commodities. I know it's like oil, gold, silver. Okay, there's the commodities. Just basically, but just look at this. Crude oil fell. Gold depreciated. Silver sank. So my only point there is it kind of goes down. Here's stock. The stock is S&P 500. We saw that little graph. It dipped. And the European, it sank. And the Asian Pacific, it slid too. They're actually all going down. Here's another one. Stock market today. This was a couple days ago. Certainly looking up the reputation as the most difficult month on Wall Street. So this is September, traditionally the most difficult month, I guess, before holiday seasons. To wit, and Nifty started this 30-day span. We don't need to know this because I'm not expert enough to really make hide nor hairs if I absorb this. But September is supposed to be a stiff month for the stock. Now, why am I talking about the stock exchange? Stock Market Live updates, stock sink in September. Gloom continues. The point is that the stock market is connected to cryptocurrency by the one factor that I'm telling you about is the common denominator, people. They're both organic markets, and the people who are really interested in stocks will also be interested in cryptocurrency. It's not that these things are physically connected, but the person with the money buying and selling will go from here to over there to over there to over here, and they'll swap back and forth. They'll go, I'm going to move from this market over to that market over to this market, simply because of their reacting to a current event. So this is another thing that says this stuff is going down. And jump back to where we need to go, looking at cryptocurrency. Okay, here we go. So here's the Bitcoin chart, because where's the port of call for crypto? Bitcoin. They're going to come in, they're going to get Bitcoin, sell Bitcoin, and then move around in the cryptocurrency sphere. Now that is my prognostication. That's my speculation that's my guess of what people do, because that's what buying and selling for profit. It's all speculation if it's going to go up or down. So if you look here, this is September 18th, 19th, and here's the 20th. Happening with all those news on, what was it, the 20th, the 21st? Look at all the news articles that came out. Oh, here comes September, the 20th and 20th. And then these things start dipping down. So if we're looking, here's, oh, wrong way again, apologize for that. Okay, here's a closer look. Bitcoin, 12th, 14th, 16th to 8th, 20, 21st. So here's the 21st. Look where it really starts to dip. September 20th. This is sort of the end of the day, I think, September 20th. This is right before September 21st. And there's a chunk, it goes down, and it goes down hard, but it bounces back up a little bit and then sort of tapers off. Then it does this thing down here. And there it is again. Down, goes over, and then down again. But I was going to say, well, look at these things and take a look at the ODUWA behavior, because this is one blockchain and ODUWA is on another blockchain. But if people buying and selling in this crypto sphere of this blockchain go over to the other blockchain, it's the factor of common denominator, the organic factor of the people. So it kind of went up, it kind of went down, and here's October, and just hold on, because if you look at just an average market curve, they overall go up. And if you just do a little bit average, it goes up and down as it goes up. And this volatility in the Wall Street type of thing is more accentuated in the cryptocurrency scene. So here's the 21st, where it took a dive at first. And I was trying to see if I can compare. There's that tail end of the graph that was just before this one here, upper right, now down here. And notice the curve there, where but it's hard to see because it needs a scale. And here's that other one that I showed earlier on. And notice this just goes down and does this thing, and it goes down, jumps up, and does that thing. There's similarity. Now this is Wall Street, and this is cryptocurrency. So HODL, just hold on, and it goes back up. And by the time I got back online, because our internet was being fixed, by the time I got back online and did the insert and looked at ODUWA Coin, it was already back up. So HODL, it goes up anyways, and it already went up by the time I finished video of this in the interview. The market fluctuates, don't worry about it. So as buyers and sellers, people are the common denominator. That means us, if we're in it. And they react to new events. So what's the lesson? don't react. No panic, no worries. Just let it ride. And with the ODUWA Coin, it's really going to be a long time stable gain, I believe. And I'm waiting for this to really bull up. And it's already looking like it's bulled a little. I wouldn't call it bull. It went up, okay? I'll be corrected all over the map. But it went up significant a little. I thought pretty hefty. And now it's lingering up there. And then it kind of dipped down. I'm going, okay, what's going on? And that's why I looked into the overall market. But just HOD.L, that's what I'm going to do. And ODUWA Coin is going to be back up in that value portion of the trading markets. And otherwise, it's a wonderful coin with a wonderful purpose. And because of that, the value is increasing and just destined to increase. So that's it. Hang loose. Sorry it was a little long. Take it easy. Till next time. Aloha.